Welcome to the Crypto Layer HQ. Today we will be going over key levels for Bitcoin. As we can see, we have recently rejected 74K, which we identified as a key level as it held as resistance back in March of 2024, as well as support in April of 2025. This has been a very key level the entire cycle, and we now retested it and got a fairly strong rejection. We've also been holding at 65K recently. As we can see, it's been holding as support. If this level does end up breaking and we do end up getting a further leg down, similarly to what we had in end of January, beginning of February, where we went from 90K all the way down to 60K, then we could end up going lower. And it's important to identify key levels that we might end up holding as next support. So the first level is 53K. And the reason for that is we can see it acted as support back in 2024 when we were going in this consolidation pattern for approximately 9 months. We can see it held as support in July of 2024, again in August of 2024, and again in September of 2024. And even if we go further back, we can see it acted as support in March of 2021 and even in April of 2021, and we even retested it in December and September of 2021, where we can see we rejected here and we got close to it here and rejected. So even in the prior cycle, it has acted as a key level. So definitely 73K is a point to watch where we could end up rejecting and finding a first level of support. From the highs, this would be a drawdown of 57-58% approximately. And from current prices, that would be an additional 20% drawdown. And from the level we rejected at 74K, that would be a 28% drawdown. If we look at the drawdown we had in beginning of February and early January, we can see from the point we topped all the way to 60K, that was approximately a 35% drawdown. And from the level we started breaking down, that was a 30% drawdown. So if we do end up having a similar drawdown, let's say 35% from where we rejected at 74K, 35% would take us to the next critical support level, which is at 48K. The reason this is a very major level, if we look, it's where we wicked almost to in August of 2024, and even where we acted as resistance in January of 2024. And even if we go back to the prior cycle, we can see it acted as support many times in 2021, including in April, and then acted a bit as resistance in September, August of 2021. And again, it was a major resistance level in April of 2022 during the bear market, where we eventually retested it, but then had further drawdown. So definitely 48K is a major level to watch. Also, when we go below 50K, that might attract some buyers since they haven't seen the 40s in a long time. So we might end up holding around these levels, 53 and 48K. If we do end up going even further down, we could end up being at 43K. That wouldn't be my base case, since from the current rejection level to 43K, that would be an additional 41% drawdown. And from the top, that would be a 65% drawdown, which is quite a big drawdown for so early in the cycle if we do end up going down reasonably soon in the next few weeks, let's say. So that is also a key level, since we can see in December and January, we held it in December of 2023 and January of 2024. It clearly acted as a resistance level. And if we even look back to the prior cycle, we can see in February of 2021, it acted as support, and even in August of 2021 and September of 2021, and many times in early 2022, we can see it acted as resistance in January, February, March, and even April. So definitely that is a very key level based off prior price action. And then the final level I would be watching would be 38K, since we can see that was a major level that in November of 2023, once we broke out from it, we can see we had a big move up. So it was definitely a level that we were essentially rejecting from several times in November, and then we broke out, and then we essentially retested it in January of 2024. And then even if we go and look previously in the 2021 and 2022, we can see it acted as a resistance in January of 2021 and many times in June of 2021, and acted as support in August of 2021. And we can see in early 2022, in January, February, March, and April, it acted as a very big support level. So I do think 38K is going to be a very strong support level. And even if we look from the top, we can see that 38K would be a 70% drawdown, which could potentially be where we bottom this cycle. So I don't think we will go there that quickly, but if we were, I would definitely be looking to buy at these levels, since a 70% drawdown could potentially be the amount we draw down this entire bear market. Since last cycle, we drew down 77%, and the cycle before we drew down 84%. So we can see each drawdown, each cycle, the diminishing returns are causing us to draw down less and less. So if we look in the prior cycle, since it was 77%, you could definitely expect that this drawdown would be 70%, which would take us to 38K. So I think these levels are going to be very key levels if we do end up rejecting and going lower, especially in the next few weeks, potentially months. Keep an eye out on these levels, as we will potentially end up consolidating, acting as support, and testing them several times, and potentially going to the final level later this year in Q4 of 2026. So my base case would potentially be maybe we end up consolidating some more here and eventually retesting the first level, potentially consolidating again, maybe going lower, and then eventually towards the end of the year, potentially we could end up retesting these lower levels. Of course, it's very hard to predict short-term price action, but it is important to have key levels in mind. And this is assuming that we do end up breaking down lower.